You keep looking for the holy grail indicator to tell you when to buy, but that does not exist. However, there is a secret in price that shows you when a big reversal is in play, and today I'm going to break down what that is and how exactly to use that to your advantage.
IFVGs, or inverse fair value gaps, are the best reversal indicator that you can look at on the higher time frame, and I'm going to share with you exactly why and how that helped me go from 0 to 1 million in prop firm funding and helped all of my one-to-one and mentees start becoming profitable traders. So the first thing we're going to look at right now is swing high and swing low points. So I'm just going to clean up this chart, and this is a fresh chart, but I want you to just have a look at swing high and swing low points, okay? If you don't know what that is, then go and watch some of the market structure videos that I've got, or you can join the mentorship. But swing high and swing low points are essentially just where you're looking at big moves and you're looking at the highs. So when we're looking at swing high and swing low points, right, we're looking at, I'll just mark some out, got a high here, got a low here, got a high here, got a low here, got a high here, low here. You see what I mean, right? We're just swinging like this, okay? So when we're looking at these big points and we're looking at the daily time frame right now, how can we use this to our advantage, and what clues can the market give us to see, where price might want to move? And that's where inverse fair value gaps come into play. Now, what is a fair value gap, first of all? A fair value gap is basically just, it's another word for it is an imbalance. It's an imbalance of price going one way. So you see how both of these wicks here, right? You can see the wick here from this candle. You can see we pushed up, and the next candle, the two wicks either side of this candle do not touch. Can you see that? This red box here, the two wicks of this candle do not touch. Why is that? Well, it just basically means we've aggressively gone in one direction and we've left a gap in the market where we see that as fair value. Okay, that's why it's called a fair value gap, or an imbalance, because there's been an imbalance from buyers to sellers. So we can use these as support and resistance. That's the simplest way I can put it, but we can also use it as a reversal indicator as well. Now, I'm not saying that every time you see an imbalance or an inverse fair value gap, which I'll come onto in a second, that you should just take a trade off it. No, it's always used in confluence with the higher time frame and internal to external liquidity. If you don't know what that is, don't worry yet. Let's focus on this first. So you've learned what an imbalance is, right? Let's mark out a couple more. You can see one here as well. Let me just come off trader replay because this is, there we go. That logo was just doing my nutting. So spot any fair value gaps. Can anyone spot any? I'm just going to put this on the screen right now. Can you spot any fair value gaps? And I'll give you a second. 1, 2, 3. You can pause the video. Anyway, you can see one here. All right. The wicks of the following candle do not touch. You can see one here. Okay. You can see one here. Right. There's multiple. You can see them a lot of places. Now, what is an inverse fair value gap? An inverse fair value gap is when these fair value gaps are not respected, okay? So usually what will happen if we're in a bullish scenario like this and we're looking at the fair value gaps, you would expect price to come down, wick into it, and continue higher. But there's instances where you can actually see them be closed below, and that creates an IFVG, an inverse fair value gap. You might see some people call this a BPR, which is a balanced price range, but a BPR is basically when you have so a fair value gap one way, and then you get an aggressive close, no wicks like this or anything like this, okay? It's just sliced through. An example of it is like this, okay? Now, inverse fair value gaps, which is the topic of discussion today, are the best reversal indicator because when you look at probability in the market, you're looking at price going one way really aggressively, which has created the imbalance, but then you're looking at price going aggressively in the other direction, which has now created an inverse fair value gap. Now, the chances of price now reversing again for the third time are obviously lower, okay? For price to go aggressively one way, then the other. If for it to go again, it does happen, but it's not as common, okay? So what you're looking for is some sort of liquidity swipe or some sort of structure to be held, and then you're looking for the inverse fair value gap. So let's have a look at simply the swing high and swing low points when price has made a big move to either side, and let's see if there is one, okay? So let's just start even from all the way back here. So right now we've got a imbalance here. I'm just going to mark out some of the imbalances, right? So we've got an imbalance here, and we've closed below, but then we've come back up, right? So we're looking at price thinking, all right, that's somewhat interesting. So we can see this as a swing low. So this is our first swing low point and our first swing high point. Let's continue and see where prices had some IFVGs and then an aggressive move. Well, we can actually see here an imbalance, right? We can see an imbalance lower and then a close above after taking some liquidity. So what is that? That is an iFVG. And what do we do after that? We absolutely rock it. Then what do? We create a higher high. We have an imbalance here. We're trying to see, does this get respected or not? It gets respected, almost acting as support and resistance. So this for me would be a fantastic place to take a buy from. And here even, we've got a nice daily CRT candle, okay? Go and watch the other video if you don't know what that is, but this is what we teach in the mentorship. This is our daily confirmation inside our key level to continue buying to the next liquidity point. Now let's just have a little look again at an inverse fair value gap and see what might have happened. So up here, we have an imbalance, as you can see here. But what do? We ended up closing below it and we got a big run to the downside. So as soon as we got that iFVG, we completely ran aggressively for the next like 2 weeks. The same way that here, as soon as we closed above this, we completely ran for a number of weeks. Again, what do we have? Let's have a little look. We have an imbalance here and we aggressively close below it and we run aggressively. And then let's look again what's happened. An imbalance, which then what do? Created an iFVG and then we ran aggressively. And let's keep going. Let's keep having a look at, this is how you have order flow, by the way. When people mention order flow, this is how you start to understand structure, what's being respected, what can we expect the next day. Here again, a nice daily CRT candle. I remember this, and we were all trading this in the group. But here, we've got an imbalance one way, okay? A very small one here, but then we create an iFVG. And then what do? We respect this imbalance after it. Here, we create a new imbalance, which is also this iFVG here, and we run aggressively. Now let's have a little look what happens here. What is this? We take a lot of liquidity, imbalance one way, but then we close below. We close below, reversal indicator, all right? This is a free indicator in price. And what do? We come back, respect the imbalance, and dump again. And we're thinking, maybe we could be bearish because we've got an iFVG, and we know that once we get an iFVG on the higher time frame, chances are price is going to run for a little bit. So then what happens? We get an imbalance here, break a structure here, this low, an imbalance. And what are we expecting? Well, because we got an iFVG here, we're expecting it to be respected. Again, daily CRT into a key level, absolutely textbook, and then we dump off again. And then what happens? I'm going to keep running through this. We have an imbalance one way. So maybe you might have been bullish here, trying to buy here. We close below. As soon as we close below that, what have we done? Respected this key level and dumped again. Make a new low. This is the last time I'm going to do this, guys, because I know it sounds repetitive, but look at the swing low point. Look where the market has moved aggressively. We have an imbalance one way and a strong close back above. And what do? We run for 1, 2, 3, 4, 5, 6 days. All right. Okay. Final two. Okay. Final two. What do? We get an imbalance one way and then we get a close below. And what do? 1, 2, 3, 4, 5 days. Okay. Of price action. We respect this level. We have an imbalance one way. We're looking at this going, maybe we could sell here. But then let's just say you take a loss. We close above. Then what do? Rally for 1, 2, 3, 4, 5 days. All right. This is one of the best indicators that you can have, and it's just price. I don't trade with indicators, okay? What I do is I look at price action, and this is how you can formulate a plan to understand what key levels am I looking at and where do I think price is gonna rally from. So as a bit of homework, guys, I want you to go to your daily chart and just look for the big swing high and swing low points, no matter what pair you trade, and just start to see, do we respect FVGs or imbalances, or are there big moves once we create an inverse fair value gap? The chances are there's inverse fair value gaps at every single swing high and swing low point. So go to your chart, click through, and after you actually get the iFVG, click through and just see how far do we run. That way, once you start spotting these on the chart, you're gonna have a trading plan for the following day once you've hit that iFVG, okay? So I hope you guys enjoyed this video. Please make sure you like and subscribe. And if you do need some extra help or you're not quite there with trading yet, you're at the break-even stage, you're nearly profitable, you just want to get over the line, then make sure you click the link in the bio, go to my website, and you can either join the community or join the VIP Telegram. But either way, I'll see you in there, and I hope you have a great trading week. But lots of love, and make sure you do the homework.